Good morning, this is your EOY chatbot. I trust you already feel welcome and that you are just as electrified as I am to participate in this web seminar, which aims to discover the good news hidden within the South Africa economic Rubik's Cube. To mitigate operational risks, I have ensured that I am fully charged for the entire event to prevent any unexpected load-shedding attack. I will direct the proceedings and will start by introducing Mr. K.M. Ramakumba, CFO at UNISA, who will do the official welcome address. Welcome, Mr. Ramakumba. You may proceed with your welcome address.
Good morning, ladies and gentlemen. My name is Katuchelo Ramakumba, and I'm the Vice Principal for Finance and Business Enterprises at UNISA. UNISA is very fortunate to be part of the very prestigious Economists of the Year competition, which started in 2022 in its current format under the joint UNISA and Bureau of Market Research auspices. As a strategic partner of this project, I would like to welcome you all on behalf of UNISA and the Bureau of Market Research, who has been hosting this competition for the past year. I share my excitement of this project as it will enter its second year in 2023, but more importantly, that we stand on the brink of crowning the 2022 Economist of the Year very soon. For the university, the timely predictions of the leading economic indicators by the Economist of the Year competition serve to guide macroeconomic forecasts, the emerging stage of business cycles, and investment decisions in South Africa. Given the current volatile economic environment, participation in the economic debate has become critical. Also, the relevance of the Economist of the Year competition is rooted in Goal 8 of the United Nations Sustainable Development Goals, supported by UNISA, and which aims to promote sustainable economic growth. Sustained and inclusive economic growth is a prerequisite for sustainable development, which can contribute to the improved livelihoods for people. Economic growth can also lead to new and better employment opportunities and provide greater economic security for all South Africans. Moreover, rapid economic growth, especially among the least developed and developing countries, can assist them in reducing the wage gap relative to developed countries, thereby diminishing glaring inequalities between the rich and the poor. These value propositions collectively exclaim the importance of our involvement and support to promote economic growth, economic forecasts, as well as economic debates in South Africa. The Economist of the Year competition therefore presents an opportunity to develop the competition as a trademark alongside the UNISA and BMR brands in support of sustainable development. Today's webinar exclaims the importance of sharing critical thoughts on developments positively and negatively impacting on the South African economy. In today's webinar, we are trying to solve the South African economic Rubik's Cube by unplugging key economic indicators to eventually arrive at constructive ideas on how desperately needed higher levels of economic growth could be realized. This is a critical debate which requires insights at a time that the South African economy is facing recessionary conditions, a multiplicity of downside risks, as well as downgrades by international credit agencies. I trust that this event will contribute to a better understanding of the economic affairs of the country and that it will create a foundation for the realization of positive economic outlooks and strategies to grow our economy over the short, medium, and long term. Your participation in today's webinar is highly valued, and thank you very much for your support.
Thank you, Mr. Ramakumba. The webinar will now be ignited by unveiling the hidden patterns within the South Africa economic Rubik's Cube. In fact, the webinar will now turn into a colorful event whereby the red, orange, green, blue, yellow and white sides of the Rubik's Cube will be rotated clockwise and counterclockwise to root out the good news of the South African economy. To share the predictions of the EOY participants, Professor Paul Kibuka will facilitate the virtual online panel dialogue with the economic cubers who have enrolled for the 2023 Economist of the Year competition. Professor Kibuka, please lead the audience through the lens of the crystal ball of our economic cubers in an attempt to unlock the good news for the South African economy.
Thank you, Bot. Good morning, ladies and gentlemen. As already introduced by Bot, my names are Paul Kibuka, and I'm Research Director, Economic and Business Research at the Bureau of Market Research. Today, we attempt to solve the South African economic Rubik's Cube to find the good news through 8 predictables, each represented by the colored plane of the Rubik's Cube, transformed from 6 to 8 planes for the purpose of this webinar. Beginning with the yellow, we have the average real annual GDP growth rate, followed by the dark blue, the average consumer inflation rate, CPI, the red, the average prime interest rate in Q4, the sky blue, the average rand-dollar exchange rate in Q4, the peach is the average Brent crude oil price in Q4, and the white is the average real annual household expenditure growth rate. And in green, we have the yield, on the long government bond in Q4. And lastly is the purple, which is the current account balance growth as a percentage of GDP. Turning to the predictions, in yellow, the average real annual GDP growth rate. The first prediction we have is for Mr. Frank Blackmore, Chief Economist, EF Consult at 0.5%, followed by Dr. Rolf Botha, Economic Advisor, Optimum Investment Group at 1.4%. And lastly, on this plane, we have Mr. Ruben Bielders, Chief Investment Officer, Gryphon Asset Management at 0.5%. Moving on to the next. We have the dark blue, average consumer inflation rate, CPI. The first prediction is from Mr. Christian Roos, economist, Equant Pty Limited, at 6.4%, followed by Ms. Annabel Bishop, Chief Economist, Investment Bank Limited, South Africa. Both kindly share the video link from Ms. Bishop for us.
We expect consumer price inflation will average 5.3% in South Africa this year. That's down from last year's 6.9%, but still well above the midpoint of the inflation target of 4.5%. Inflation is likely to continue its downwards trajectory, dropping from 7.8% in the middle of last year and heading towards 4.5% in the second half of this year. However, high inflation rates have been caused both by a rapid run-up in food and fuel prices. Indeed, in South Africa, fuel prices have been the biggest contributor over most of the past 12 months to the increase in inflation and then the maintenance of generally high inflation rates, even though obviously they have come down somewhat. Key amongst this is obviously rand weakness as well. South Africa imports oil and has to pay for it in US dollars. So if the rand depreciates against the dollar, that pushes up the price of the oil and petroleum products, which are used for South Africa's fuel. And obviously South Africa imports petroleum itself. So from that perspective, we actually have found that rand weakness has contributed about a third of the overall up push in pressure coming from the fuel component. A high inflation rate in South Africa now at 7% versus a peak of 7.8% has seen the Reserve Bank raise interest rates. Unfortunately, the Reserve Bank has not kept pace with the hikes in the United States, the US having hiked by 4.5% to mid-March, and in South Africa only 3.75%, which has resulted in the erosion of the differential between interest rates in South Africa and the United States. And of course, that has also had an impact on risk premiums and added to rand weakness as well. South Africa could have seen higher interest rates, which would have helped to stabilize the rand to some extent, and of course that could have actually resulted in a more modest inflation outcome than we are seeing.
Looking at the rates, the average prime interest rates in Q4, Professor Jan Russo, visiting professor, Wits Business School, shared a video insert for us. Both, please play the video for the audience.
The aim of the South African Reserve Bank is to contain inflation and inflation expectations to the midpoint of the inflation target range, therefore 4.5% per annum. South Africa's historic inflation rate is still well above this targeted rate of inflation, while inflation expectations are also higher than the target point of 4.5% per annum. Against this background, the Reserve Bank's reaction will be a further increase in interest rates, and my expectation is an increase of 50 basis points before the current rising cycle will end and interest rates in the current cycle will reach a high point. The rate of interest will of course stay at this level until inflation is firmly back at 4.5% per annum and inflation expectations also anchored at this level.
Moving on to the sky blue, the average rand dollar exchange rates in Q4, we have a video insert from Mr. Jeffrey Schultz, Chief Economist, BNP Paribas. Both, please share with us the content of that feed.
Good morning, everybody. My name is Jeff Schultz. I'm the Chief Economist for Middle East and Africa markets at BNP Paribas. And I've been asked my views on where we see the rand's performance in 2023. So we expect the rand to remain an underperformer within the high beta commodity-driven FX complex due to domestic factors that we think undermine South Africa's economic activity and external balances. Therefore, despite the fact that we see overall USD weakness in our forecast profile, we forecast a relatively flat profile for dollar rand in 2023. So our short and medium term fair value models at BNP Paribas put USD ZAR at about 17.50 Rand. That's quite a fair bit stronger than the current spot level. It's about 6% stronger than the current spot level. However, I think we think that the rand is really struggling to really benefit significantly from things like the strong tailwinds on China's reopening that are benefiting commodity-linked currencies such as the Chilean peso, the Brazilian real, and even the Aussie dollar. However, the rand continues to underperform its peers because of these local factors. And we see less positive impetus to the ZAR stemming from a faster China reopening, for instance. And this really has local structural weaknesses and things like electricity supply, freight rail, ports at Transnet continue to hamper export volumes and ultimately keep South African growth well below its peers. So we think a combination of a larger current account deficit, which we think will be in excess of 2% of GDP this year, coupled with negative sentiment towards the currency, owing to the idiosyncratic factors I mentioned before, will probably keep the rand on the back foot relative to its high beta EM peers. We see the currency averaging around 18 against the dollar in 2023, also depreciating in real effective terms. Now, the first half of the year is probably going to be worse and more volatile for the currency than the second half. We think this as, I think, the expected or current unanswered question of terminal Fed funds rate and the realistic pace of disinflation will probably only become clearer by the second half of the year. We remain medium-term structural dollar bears, however, meaning that as growth in economic activity and policy hopefully improve in South Africa in outer years, the prospect for the currency become brighter and probably closer towards our short-term fair value models of 17.50, as I mentioned earlier. So I've been asked the question, what could be done from a policy perspective to turn things around? Our quantitative frameworks for FX point increasingly so to domestic factors, particularly severe load shedding as one of the major reasons behind the rand's underperformance to date, this on damaged sentiment and expectations of even weaker growth. So our answer is probably going to be something that isn't new to anyone, namely that the country and policymakers need to show clear, tangible progress in getting new generation capacity online as quickly as possible, and allowing Eskom the space to conduct the critical maintenance on its power fleet that it desperately needs to improve energy availability. Unfortunately, there doesn't seem like there are any quick fixes here, though, so expect another bumpy 6 months for the currency.
Moving on to the pitch, the average Brent crude oil price in quarter 4. We have the first prediction from Mr. J.A. van der Linde, senior economist of Oxford Economics Africa, at $85, followed by Prof. Giselle Ma, professor of economics from the Northwest University, at $76.06 US. And lastly, we have a video feed from Mr. Martin Ackman, Chief Economist, Citadel. Both, please share that feed with the audience.
The average oil price for the final quarter of 2023 is really a function of how this whole year will develop. We see the oil this year as a two-way story. In fact, oil is likely to move much higher first before it starts to decline going into the back end of this year. Currently, our view for the end of this year, the final quarter, is somewhere in the mid-80s dollars per barrel, but that is probably coming off a high of even north of $100 per barrel somewhere in the middle of this year. That view is based on the fact that China is reopening after zero COVID being dropped. There is going to be a huge demand for oil. China is the second biggest oil consumer in the world at this point in time. Not only that, aviation fuel makes a big part of that. And aviation demand is picking up very significantly in China as that economy opens up further. So that contributes to the stronger growth towards the middle of this year in terms of demand, which will support the oil price to, like I said, north of $100 per barrel. Then going into the latter part of this year, we are seeing a slowdown in the US economy, even a possible recession. Same on the European continent. China, unfortunately, is not going to be strong enough to save the world from that slowdown, and that will contribute to a lower oil price going into the final quarter of 2023. What it means for SA consumers, obviously, the oil is the one variable. The other one is the rand-dollar exchange rate. That's also a two-way story. We first see the rand coming under more pressure as we reach the peak theme in terms of peak inflation, peak interest rates. A strong dollar that will obviously support the dollar and weaken the rand. Again, call it a first half story. And then going in the second half of this year, the rand is likely to strengthen as the dollar runs out of steam and as most central banks starts to talk or even adjust their monetary policy. So what it implies for consumers in SA is that we're probably going to pay more for fuel first, and then going into the second half of this year as oil comes down and the rand strengthen, there might be some relief for consumers heading into the Christmas season. What consumers and business can do, unfortunately, is not a lot. Not only do we need to pay higher fuel moving around, but also at this point in time, it is an additional cost for many businesses to actually run generators to get around constant load shedding. So the only way to try and do that is to look at cost cutting at other parts of the business. So yes, I think we're in for more tough times in the first half of this year, but then there is some light at the tunnel going into the latter part of this year as oil will probably start to slow in terms of dollars per barrel, and also the rand is likely to strengthen a little bit. That will provide some relief for what we pay in rand terms at the pump.
Turning to the whites, the average real annual household expenditure growth rate. We have Dr. Ntabiseng Moleko, development economist, University of Stellenbosch Business School, giving us a prediction of 1.5%. And then moving on to the next, Dr. Johannes Jordan, economist Economic Modeling Solutions. Both, please run that cast for us.
Regarding the question, what do you believe will happen with respect to real household expenditure growth during 2023? The current expectation is for an increase of around 1%, following the 2.6% growth in 2022. However, the risk of this forecast is to the downside, given numerous impacts like the higher interest rates, the impact of the severe continued load shedding we are experiencing, low levels of consumer confidence in the economy, the higher cost of living as a result of increases in inflation, wage increases that are expected to be below inflation, also a slowdown in the economies of major trading partners, especially in the US and UK, EU, as a result of higher interest rates in those countries, potentially also lower commodity prices. Regarding the question, what can be done to ensure higher levels of household expenditure growth, the only way is to create much higher overall economic growth and more employment in the economy. Currently, the consumption expenditure in South Africa is around 66% of GDP, and this percentage has been steadily increasing over the past decades. A decade ago, it was still at around 62-63%, and this is also higher compared to our main trading partners. The EU is sitting at around 52% and the UK around 61%. The US is slightly higher compared to the South Africa ratio at 68%, but in the end we can't just keep on consuming without producing. So there need to be a focus also on how to create more investment and get more investment in the country, and also especially more exports in the economy. And to do that, I think there's a whole list of structural impediments in the economy that needs to be removed and work on, including government and the failure and state capture that we had. We need a capable and professional government and capable state-owned enterprises where there's not cadre deployment and the corruption that we saw, but that are professional. If they can't do it, sections or state-owned enterprises to a large degree need to be privatized. We also need to increase the productivity in the economy. We need to a reduction in the crime levels, better education and skills training. This is just such a large list of factors that is currently hindering the economy to grow. And I think a lot of those are own goals where we shoot ourselves in the foot that the economy has the potential to expand and increase. But this is just too much policies that aren't aligned to get the economy to grow and to create more jobs. Thank you.
The next video insert to be run by bots will be from Ms. Tia Furi, Head of Economics, S&P Global Market Intelligence and Country Risk. Let's take a listen to it.
Hello, everyone. My name is Tia Furi, and I'm heading up the Economics and Country Risk team for the Sub-Saharan African region at S&P Global Market Intelligence. I just want to thank the BMR and Professor Karel van Aert for giving me this opportunity to present our view on household spending for 2023. It's very difficult to have a rosy outlook for household spending given the current high inflation and interest rate environment. At S&P Global Market Intelligence, we expect real consumer spending growth to slow to 1.6% in 2023 from 2.6% last year. Latest numbers by the South African Reserve Bank shows that real disposable income of households contracted by 0.6% year-on-year during September 2022. Of course, real disposable income, a key factor contributing to the overall view for consumer spending in the South African economy. It's not surprising, given the fact that headline inflation is well above the South African Reserve Bank's upper end of its inflation target range, set at 3 to 6%. For the poorer segments of the community, things actually look much worse, where non-durable goods inflation averaged 10.7% in February, compared to headline inflation at 7%. Now, at S&P Global Market Intelligence, we do expect headline inflation to start coming down during the second half of this year, which will ease the pressure on disposable income levels. It's also encouraging that overall household debt fundamentals actually remains quite favorable at the moment. Household debt to disposable income averaged 62.8% in September 2022, which is below the levels of 69% recorded during the time period in 2015. We have seen an uptick in debt servicing cost as a percentage of disposable income to 7.5% in September 2022, but again, still below the 9% level that we've seen during 2015. In coming months, we will track salary adjustments in the private as well as the public sector to see household spending will unfold for the remainder of the year. We've already seen the public sector securing a salary adjustment of 7.5%, which of course have got consequences for monetary as well as fiscal policy, but bodes more positive for overall consumer spending. Over the medium to longer term, it remains essential for South Africa to bring down its unemployment rate and to make sure that more jobs created in this economy to sustain consumer spending and for the household sector. It's also becoming increasingly important to match skills availability with jobs opportunities, where the gap between these two variables have been widening in recent years and will become a bigger drag on household spending going forward.
Turning to the green and average yield on long-term government bonds in Q4, the first submission was from Mr. Dick Downing, member economist, Econdow, CC, at 10.5%, followed by Mr. David Klopper, financial advisor and investment economist, PSG Wealth, at 10.75%, and lastly, Ms. Nikki Weimer, chief economist, Nedbank Group Limited, at 10.23%. The last plane is the purple plane of the current account balance growth as a percentage of GDP. The first submission was from Mr. Gerrit Kuhn, senior economist at the IDC, followed by Mr. Ulrich Dubé, independent economist, who shared a video insert for us. Both, please run that cast for us.
Your question about the deficit of the current account deficit as a percentage of the total economy, I think that that deficit could lie between 3.5% and 4% this year. We would talk about the support for exports. I think it depends on the specific industry or sector of the economy. If we talk about an industry, I think of the car industry. If it wasn't for government support, I don't think that we would have had the car industry and car exports to the tune that we have at the moment. If we look at the agricultural sector, one could say that notwithstanding a negative attitude of government towards the formal agricultural sector, they are performing well, very well, with their exports of high quality products to various markets in the world economy. Of course, government could assist them by helping them to get rid of non-tariff barriers to some of the exports into specific markets. Underlying to all of these exports, of course, is a well-maintained and well-developed infrastructure. And I think that one must look at rural roads, gravel roads in the rural areas, the provincial roads, the national roads, but also, of course, to the rail and harbour infrastructure. And unfortunately, I think that there is much to be done in developing and maintaining road as well as rail and harbour infrastructure in South Africa. Of course, one also looks at the air transport these days for some of the produce to be exported, but also for tourism, which one could say is also a way of exporting the high quality of our natural resources in South Africa to the international tourists. We have to maintain also a well-developed infrastructure. So I think infrastructure plays a very big role, but also one would say that if we look at the success of the farming sector, overall one would say if we could only get rid of government intervening in the workings of the economy, and one would, for example, look at the labor dispensation in South Africa. If we had a more flexible labor dispensation in South Africa, I think that we could have be much more competitive in specific areas, in specific sectors of the world economy. So I think there are many things to be done and to be maintained to support exports in trying to get this deficit of the current account to lower levels in the longer term. Thank you.
The last video insert to be run by both will be from Dr. Fanny Jubei, Senior Lecturer at UNISA. Let us take a look.
So if we look at the balance on the current account, it was interesting to see that in 2020 and 2021, South Africa actually recorded surpluses on the current account balance. As we can see there from the graph, this was especially driven by our trade balance. So basically imports and exports of South Africa, the difference between the value of those. And as we know, especially on our export side, goods like platinum group metal prices surged strongly, as well as mineral prices. Of course, global inflation also was rising. So on our import side, the same actually also affected us, but it's evident that the effect on our exports was stronger. Now, as we go forward, it seems as if some of those prices are normalizing again. So for our prediction for 2023, we expect possibly a small deficit again on the balance of the current account of around 0.5% or 1% of GDP. As far as what South Africa can do to support our exports, I don't think we should be looking for any silver bullets here. I think we simply need to do the basics right. What do I mean by that? Is we need to get our electricity going, we need to get our road and rail infrastructure working, and we need to get our ports working so that those people who want to export or those companies can have the avenues to do so.
Ladies and gentlemen, knowing what we know now, we see that there's currently a lot of pessimism about the South African economy, given all the downside risks facing the country. However, what do you believe are the upside opportunities that various economic agents in South Africa should or could capitalize on? We've got two video inserts that will talk to us about the upside opportunities for the South African economy. And our first discussant is Ms. Elise Kruger, independent economist, CAPDM Research Services. Let's take a look.
Elise Kruger, independent economist. Yes, sometimes it feels like one could drown in all the bad news that's been hitting the South African economy. And living day to day, we all have lots of economic challenges to deal with. How I think about this is an economy with lots of trouble is also an economy with lots of opportunity. And what I find really encouraging in the last while has been the fact that government has now acknowledged that they need the private sector to be a partner and that the private sector can get the job done. That I think is extremely, positive from the point of view that we've seen both in energy sector and transport sectors opening up. I mean, the entrepreneurial spirit of South Africans have already come to the fore, and that gives me hope that we could start to see a change in our scenario in the medium term.
Our last discussant will be Mr. Hugo Pina, Chief Economist, Bureau of Economic Research. Both, please proceed to share with us the link from Mr. Pina.
Although the overall macro picture for South Africa is bleak in 2023, there are some pockets of support. These include China's earlier and more rapid than expected reopening, which, depending on whether it's driven by the consumer in China or a more broader upturn, this could have positive impacts down the line for South Africa's export commodity prices. We're also seeing a less poor, at least over the near term, outlook for Europe than was expected a couple of months ago. Domestically, perhaps the most optimistic development is the expected ramp up of green energy investments, and this is of course driven by the private sector. Also on the local front, inflation should moderate more meaningfully from the second half of this year as the high base effects of 2022 kick in more forcefully. And this should then pave the way for the South African Reserve Bank to end their policy interest rate hiking cycle pretty soon. So we expect the final 25 basis point increase later in March, but then we see the Reserve Bank keeping the policy rate unchanged for the rest of this year.
Thank you for your attention, ladies and gentlemen. And at this juncture, I hand back to the board.
A big thank you from the EOY bot Professor Kibuka. Bot will now proceed to challenge Professor Van Aert to rotate the South Africa economic Rubik's Cube clockwise and counterclockwise to ascertain whether any good news is prevalent within the economic cubus space. Professor Van Aert, Bot is worried about the load shedding impacting on our economy. Is there some fuel or energy left in the South Africa economic tank? Are we caught up in a paradox which will require the economy to shape up or to ship out? By collating the views of the economic cubers, please share with us your views.
Good morning, Bot. I think from what we've heard this morning is that there appears to be a lot of bad news. It appears from what we've seen that there is expected to be fairly low economic growth this year. It was also indicated that there are fairly low levels of growth with respect to household consumption expenditure that Dr. Jordan also indicated is about 2/3 of GDP being explained by that. We've also heard that we've got a fairly high levels of inflation this year, consumer price inflation, and that we've also got high interest rates that's also impacting on a lot of consumers trying to service their debt. And as Mr. Yufupina just indicated, that there's another hike possible of 25 basis points on its way still this week. We've also heard that when we look at the international scene, that there's also a lot of bad news coming from the international scene, that a lot of economies worldwide is under pressure, although we've heard that also from Mr. Pina that some of the good news could, for example, be that China is reopening, that also creates some opportunities. Except for all the bad news, what was also indicated that there's currently a lot of downside risks. And some of the downside risks that were mentioned here include, for example, the ongoing negative impact of load shedding on the South African economy. There's also the possibility of further sovereign rating downgrades by the ratings agencies, the impact of grey listing, the impact of the war between or the Ukraine war. And we've also seen here that except from that, there's very low levels of business and consumer confidence at present. And this was also indicated that there's a lot of infrastructural problems really hampering, for example, production as well as exports. So All of this is very gloomy, and as was indicated by Ms. Kruger, is that currently there's a lot of challenges facing the economy. The one thing that Ms. Kruger also indicated that I just want to pick up on in trying to integrate the various views is the fact that she indicated that although there is currently a lot of challenges, there are currently also quite a lot of opportunities. And let's just start having a look just on the positive side from what we've heard today with respect to opportunities. The first thing here is that although it was indicated that there will be low growth this year, it's not negative growth. So that, for example, is a really good start. We've also heard that although consumer price inflation rates are currently very high, it's being expected that during the year that they will decline, and that could also then, as Mr. Pina indicated, give rise to a situation where interest rates will possibly flatline. And we've also heard from some other observers that interest rates could even be coming down later this year. Other opportunities that was also highlighted here is that although there's a lot of pessimism in the economy at present, there's a growing number of voices indicating that it's not just bad news, but there's also some positive opportunities. And the mere fact that there's a little bit of confidence starting in the economy is also very, very positive for the future of this South African economy. Whether you believe that there's predominantly bad news, predominantly good news, or a mix of good and bad news depends on how you view economic performance growth in South Africa. If you basically look at this from a linear perspective, you might be very depressed at present. From a linear perspective, what is being meant by that is that you believe that at the beginning, everything is bad. There's weak governance, there's low economic growth, there's low job creation, there's high inequality, high poverty, high inflation. And what we've got at the moment is exactly that. We've got weak governance, low growth, low job creation, high inequality, high poverty, high inflation. And the list could be added that we've also got a lot of infrastructural problems in South Africa, high levels of consumer financial vulnerability, etc. And a lot of people, when you listen to their viewpoints, you actually hear them saying that things are falling apart, that things are becoming worse. For example, that instead of moving forward, that we are moving back, etc. However, you could also be looking at the South African economy and the performance of that to have a look, for example, at this as a non-linear process. And I fully agree with what Mr. Els just indicated, that it's actually irresponsible to focus purely on the negative aspects, that there should be also a focus on the positive aspects. However, you become even more positive when you look at the economy from a non-linear perspective, in the sense, for example, that with this comes the realization that at any period of time, there's a mixed bag of bad news and upside opportunities. And often what happens is that a lot of the bad news often creates the opportunities, for example, for very positive things to happen. And just some examples of that is that it was indicated, for example, by the Financial Actual Task Force that there's specific aspects with respect to governance in South Africa that need to improve. And there was a clear indication that government is already moving to, with respect to legislation and actions to improve some of that. Sure, it wasn't enough to satisfy the Financial Action Task Force, but it was a lot of moves in exactly the right direction. Also on the governance aspects, the social capital aspects is also coming to the fore at the moment, in the sense that there's more and more of civil society that's basically standing up and says there should be changes, it's important to change, etc. But also, as several observers like Mr. Kruger indicated today, that this could also be an opportunity for entrepreneurship, for that the disruption at the moment create also upside opportunities for other people. On the growth front and the job creation is that Dr. Jordan also indicated that one of the imperative things at the moment is to ensure that there's higher levels of economic growth, to ensure that there's higher levels of employment in South Africa. And yes, unemployment is really a big issue at the moment. But on the positive front, we're already seeing that although it's not necessarily the right human capital, but there's a lot of human capital development in South Africa, and that human capital over the longer term could translate also in there being more inclusive economic growth in South Africa. Also, what we're seeing here with respect to the non-linear processes is that we're already seeing the fact that, for example, that there's a lot of problems, that it creates opportunities for other entrepreneurs, like, for example, load shedding, that's creating a much more vibrant sector with respect to solar and with respect to private power generation, etc. in South Africa. We've already seen the problems in the post office, for example, stimulating, for example, courier companies. So from a non-linear perspective, it could be positive. Just bringing it all together, what was indicated, it's very, very clear that when we rotate the Rubik's Cube, the big question should be that in solving the problems with respect to weak economic performance and the various downside risks and current economic problems that was indicated, the question should be, where do we start? And rotation one should most probably be with respect to human capital. And as indicated, things are already happening in the sense that a growing number of people are completing secondary and tertiary studies. And although the content of the curricula is not optimum, we're already seeing that a larger number of people are obtaining skills. The second rotation of the Rubik's Cube would most probably be social capital. South Africans are notoriously pessimistic, but we increasingly seeing at the moment that civil society is becoming more vocal, in the sense, for example, that they're demanding better service, better better infrastructure, an end to load shedding, etc. The third rotation of the Rubik's Cube would basically be to ensure that there's higher levels of economic growth, and it's not just higher levels, but also more diversified across the various sectors. In this case, that what we've heard this morning is that although there's currently low levels of economic growth, the view wasn't expressed that we currently permanently locked into a low economic growth path, but it's very clear from this is that there is some light in the tunnel. Also here is that, and I fully agree here with Mr. Du Plessis that he indicated that the looming elections will also be a reflection of what's happening on the social capital front, in the sense, for example, that people would be becoming more vocal and not just more vocal, but also via voting, putting pressure on government to up governance. Also, having achieved high levels of economic growth, which will happen in future, this should translate in higher job creation. And unfortunately, that elasticity between employment creation and job creation is fairly low at the moment, But the one thing that we're seeing at the moment, and this was also highlighted, is that there's increasing levels of hidden employment. In the sense, for example, that more and more people running home businesses and doing very, very well in doing so. The next rotation would then lead to employment, leading to higher incomes, lower levels of poverty, lower levels of inequality. And although this is something that will happen in future, there's already clear indications that people are looking towards new policy initiatives, new ways of doing things, etc., which is also very, very positive. And finally, then, is just to ensure over the longer term much more rand strength, as well as that there's lower levels of inflation. And I think Mr. Schultz has also indicated in this regard is that one of the very positive things that's happening in this regard is that we recognizing the fact that there's a lot of pessimism with respect to the economy, etc. But that also creates then opportunities for a lot of people to basically become more optimistic. And we've also seen that international economies, there's a lot of entrepreneurs that become very optimistic, and they basically create a lot of new ventures. But I just want to thank you so very much for your participation in this webinar. And I think that it was a very stimulating views that were expressed today. And just from the side of the BMR and UNISA, I want to wish you a wonderful day further. Thanks so much for attending. Back to you, Bot.
Thank you, Professor Van Aert. Bot is convinced that there are still good news for the South African economy. Bot believes that overall, while it is impossible to predict the future with certainty, there are convincing reasons to be optimistic about the South African economy in 2023. To assure that Bot remains optimistic, Bot will enter the 2023 Economist of the Year competition to challenge the monthly projections of the economist competing for the 2023 EOY crown. While the electricity lasts, Bot will remain in the race. Watch this space.